Hey, it's been a while since I've been on YouTube. I've been traveling. I'm back in the Philippines. I've been back for a few months now. It's not permanent though. I got to head back to Maui in a little bit. Anyway, I've been remiss for my stock channel. Nobody really watches it anyway, and I've been kind of bored with it because I've been living my life and enjoying my dividend income. Now, in this recent pullback, I took a big hit and I was down quite a bit, but I have recovered really nicely. Let's close this stupid ad out. I've recovered really nicely. Counting dividends, I'm up over $12,417. So if we look at this portfolio, the price return overall, even though I got some red positions still, the price return is at plus $1,768. Dividends received are over 10,648. My total return is $12,417. I was buying the dip and I was buying a lot of TDAC and T SPY plus options. I still got some options and I was doing some growth plays too, which I'm up on. I bought MAGs. I bought 100 shares of MAGs. Um, I should have been more aggressive, but I expected a further pullback. It was kind of took me by surprise that it recovered so soon and in such a vertical fashion. So my portfolio's up. I got a lot of green positions. I got positions I averaged down on, positions I added shares on, like QQQI. And like I said earlier, I had a little bit of SOXY, and it was my best position, but only picked up 10 shares. And the reality is, semiconductors are kind of in a bottleneck. So I wish I had picked up a lot more. That Yield Max ETF that targets 12 percentage on the return on a yield basis is phenomenal. Actually, it's done really well. So it's the one Yield Max fund I was picking up shares on. SPY, I didn't take any dip in it, but I was picking up other things that were pulling back, like the Gold ETF from NEOS, QQI, QI, AMZP. I had multiple puts that I sold on it, took profit on all of those currently. And I've still got some options out there on different things. And I was trading the BDC sector during the pullback, and I definitely got in too early because a lot of my positions relative to business development companies like HTGC are faring far worse. It's down over 12% on a total return basis. So I'm getting hammered on that one, but I'm selling covered calls at my cost basis, and I'm going to ride it until whatever happens. ARCC is starting to rebound. It's getting closer to my cost basis, so I'm not too concerned about ARCC. They're like the premium of the crop of BDCs that I invested in, and you can see what all my other funds have done since I've been buying the dip on a lot of this stuff. So I've got a lot of money on the sideline, and the reality is, if there's another dip in the midterm elections, which I kind of anticipate there could be, then I'm likely going to wait for that deeper beyond a 10% pullback in the market before I get more aggressive again. And if that happens, I'll fare very well because I've got plenty of dry gunpowder. But right now, my current investments, what you see here, this is just my dividend portfolio. It doesn't show my individual growth stuff that I'm doing that I'm way up on, or some of the options I still got and I'm riding on the upside. So I'm getting kind of close to closing everything because we had a V-shaped recovery. I'm going to start taking profit on every position pretty much. And I am going to have shares taken away from me because I got covered calls on a few of these positions currently, and they're doing really well. They're faring well. Uh, I don't sell covered calls. Generally speaking, I generally don't sell covered calls on my monthly distribution stuff. Those are more like buy and holds. I'll do stuff like sell cash secured puts on stuff like T SPY, which I can't seem to find on here. There we go. There's T SPY. I got 110 shares. I've been selling puts on T SPY aggressively. I haven't gotten a sign on any of them. Um, I've taken profit on the majority of them. I think I got one contract that just matured Friday, so that was the last of my contracts. And I was also trading volatility. I was shorting UVIX. I also shorted oil with US oil. I shorted that at least once or twice, made some money on that. Now, there's something I'm going to talk about real quick, and it's an ETF. It's a new one, just came out see if you can find Webull. It just came out recently. It's called DRAM. Basically, DRAM, DRAM, if you look at it, is from Roundhill. This thing just came out as soon as April 1st. That's the inception date. It's only been out less, what, are we in May? We're not even May yet, guys. This thing just came out. It's already over a 1 billion in assets. And there's a reason why this is doing so well, because this fund basically holds all the top semiconductor high bandwidth type companies that make high bandwidth semiconductors. If you know anything about that, there's a bottleneck in this particular semiconductor field. So it holds the South Korean companies like Samsung and let's see what else. SanDisk is in there. Then it holds Micron Technology. And these companies have done really well. And you see SK Hynix in there too. And it's heavily weighted toward just that area of semiconductors. So pullbacks in this will be severe in the future. But right now it's just been gangbusters. It's growing assets massively. You can see the chart has been pretty exponential, even though it's been out only for a couple of weeks. And the growth is phenomenal. The daily volume on it is over 5 million trades a day. The options are naturally going to be really high in volatility. If you look at the implied volatility for the 15 May option chain, it's at 69%. And as a result, if you know anything about high implied volatility, your premiums are going to get jacked up higher. If you're selling options, that benefits you. If you're buying them, maybe not so much. But anyway, what I'm looking to do with DRAM, DRAM, is start selling cash secure puts on a monthly basis, at least one contract each month. If I get a sign, I'll look at the chart. I'll look at what the macro is saying regarding semiconductors, and I'll decide when I'm going to average out and at what price point. You can't really chart it quite effectively yet because it's only been out for a few weeks. But I know this thing being so volatile, it's going to have its swings. And right now, currently, it's to the upside. So I'm thinking what I'm going to do is sell cash secure puts. I might even pick up 100 shares because if you look at, let's switch this to call options. If you look at call options, and if you wanted to go out, let's say, to the end of the year or the beginning of next year, 272 days out, if you sold it at the money, share price currently being $35.59, right? If you sold a 36 strike call option, a covered call, you could receive between 860 and 10. Now, what that means is you're going to multiply that by 100. That means you'd receive upwards of almost $1,000 per contract. Currently, the last one sold for 9.30. Multiply that by 100. That's $930 at the money for a covered call. Now, I'd probably go further out of the money than doing it right at the money, and I'd do it if things are really overbought like they currently are. So probably what I would do, even though the momentum is currently with this fund, it's going to the upside. AI is getting a resurgence. They're buying back in tech, but we had a V-shaped rally, so I'd be a little bit cautious. So if I did buy this because it's at nearing old-time highs, I'd probably sell it at the money, cover call on it. Buy 100 shares and just go ahead and go out to the beginning of next year, sell that 36 or even a 37 strike, and that could act as a hedge. Now, if they take your shares away, what do you care? You just got paid $1,000, nearly $1,000 in a covered call. That's fine. I'll take it. And then wait for the pullbacks and start selling cash secure puts on this thing because it's becoming very lucrative already, and it has that exposure I've been looking for. Prior to looking at this particular exchange traded fund, I was looking at a different one that is more cost prohibitive. Let's see, it was one of my AI picks. Let's see if I can show it to you. My AI picks here. I was looking at Flickr, which is more expensive. And Flickr, to be honest, doesn't have near the liquidity. I'm not sure why, but it really doesn't have that same volume. The assets under management is 608 million, which is not shabby, but the volume on it is really poor. So when I look at ETFs, I look at what they're exposed to, and I look at their volume, I look at their growth. This particular fund's been around for quite a long time, almost a decade, but it has not grown nearly like DRAM has, DRAM. So DRAM has increased in massive popularity. You can see I have MAGs on there because I want exposure to MAG 7. I bought that at bought 100 shares of mags at 61.50. I sold puts on it when it was uh, going down, picked up money that way, and I sold covered calls when it was going back up. And I just recently rolled out a covered call because I was going to lose my share, so I rolled it out to January of next year, and I picked up about $500 on that covered call. SOXQ, I'm going to remove off this list. It's a semiconductor ETF, but lacks that momentum, lacks exposure to the South Korean companies, and that's what I want. I want exposure to the South Korean field of semiconductors because that's where all the high bandwidth memory chips are. And also Micron, that's the only American company in that field as far as I know. And this thing is just amazing just how it's grown. Now, I'm not putting this out there as advice, but this is something I'll be trading aggressively in the future, and maybe as soon as next week. All right, guys, not financial advice, just an update of what I've been doing, things I've been looking at. I've had many trades. If I went over them, it'd take a freaking hour plus. I've had VIX trades using leverage ETS and getting profit on the downside when the volatility collapsed. USO was pulling back. I had bought puts on that and made money on that. Like I said, I was selling cash secured puts on stuff like T SPY plus buying shares of TDAC, which doesn't have options yet. But TDAC has made my buy during correction list because it's done really well. TDAC's done phenomenal on the recovery. As a matter of fact, both T-SPY and TDAC have outpaced the NEOS funds that are their counterparts like SPY-I and QQQI on this recovery. You can see on the one-day change how well they're doing, but if you were going to look at them on a total return basis or even on a price action basis, I know on total return they're beating out SPY-I and QQQI on the recovery. And you see that one-day change, they perform really well. Now, TDEC at some point is going to get optionality, and when that happens during the next correction, I'm going to be very aggressive getting into TDEC options. And T-SPY, I was doing puts. I was selling a ton of cash secured puts on it during the pullback. None of them got assigned. I ended up just having to buy some shares at the lows because it didn't look like I was going to pick up any on the cash secured puts. And I ended up profiting on all my puts that I sold. So it's been phenomenal for me. I've done really well, both T-SPY and TDAC. They're some of my fastest growing positions, and I'm going to focus on them during corrections. And I've added DRAM into the mix along with MAGs. SOXY is going to stay in there in my total portfolio. It's a more broader base, I believe, fund as far as what it holds in it. It's not Korean in nature. It's just NVIDIA, Broadcom, Marvel, ASML, and some of the companies I want exposure to outside of just having Micron and the South Korean company. So SOXY is a buy and hold for me. It's done very well. It's my top performer in my dividend portfolio mix. Anyway, guys, that's what I've been doing. Also have exposure to QDevoner because this is the old stuff I've been picking up and trading during this pullback. And I'm not selling any of the stuff that's in here, although I do a will strategy on MAGs. I sell cash care puts on it. When it bumps, I sell covered calls on it. Same thing I'll be doing for DRAM in the future. All right, guys, take care out there. Not financial advice. Be wary of what's going on in the market in the world and be cautious and always have dry gunpowder. All right, take care. Bye.